everyone. Today I wanted to talk about the central banks and how they are turning to gold and actually trying to start the CBDC, which is a central digital currency, and how a financial meltdown is imminent. And that's precisely why they want to acquire as much gold as possible. We've seen that in the last year, we have seen a drastic increase in the cost of living, and we've seen an increase in energy costs and food prices and a decline in housing affordability as a result of the interest rate hikes. The Federal Reserve Bank has decided to raise interest rates 7 times in the last year as a way to lower inflation. And now we're seeing in the news that they're saying that inflation has peaked. However, according to some data that I looked at today from Capital Phoenix Research, they are confirming just the opposite of that. They show the data which states that almost all of the drop in inflation has come from energy prices falling. And why would energy prices be falling lately after they have been increasing for, at least the last year or two? Energy prices have been falling because the Biden administration has dumped over 250 million barrels of oil from the Strategic Petroleum Reserve. In other words, nearly 40% of the SPR. And so the reason why energy prices drop, which accounts for almost all the drop that inflation has had, is because the Biden administration dumped 250 million barrels of oil for SPR. And this is according to this article and this data shown by Capital Phoenix Research. They say that outside of the drop in energy prices, the only significant drop in prices occur in used car vehicles. Everything else is still rising in price year over year. The article also goes on to say that because administration is no longer dumping oil from the Strategic Petroleum Reserve, that inflation has only hit bottom and that it's coming back in a big way. We know that if this is true, we are likely to see more interest rates hikes in the very near future, and which is going to make real estate sales fall even more, and as less buyers are unable to afford a home. There's also reason to believe that the data shown by Phoenix Research is accurate because U.S. gasoline prices are continuing to rise, according to AAA. They say that gasoline prices are up 11.8 cents over a week ago, and they're rising along the rise of WTI crude oil prices, which are up $3 per barrel from a week ago. With all of this happening, central banks are turning to gold as losses mount, and they know that the fiat money is about to be no more, and we're preparing for a financial collapse. So according to the World Gold Council, central bank purchases of gold have reached a level not seen since 1967. We're seeing that China is decreasing its dependency on the US dollar and acquiring more gold, and so are other countries as well. And the Financial Times claims that central banks are already suffering significant losses as a result of the falling value of the bonds they hold on their balance sheets. So central banks are not only accumulating gold because they know that governments are not likely to cut their deficit spending, they're doing it to protect their balance sheets from their own monetary destruction programs. As they do this, they're also working on developing central digital currency. And we're seeing that now all the big banks are preparing to launch digital wallets to compete with Apple Pay and PayPal. Just this last December, we heard that the European Union was planning to completely ban all cash transactions above 10,000 euros under the pretext of, quote, fighting money laundering and terrorist financing. We also know that the Federal Reserve is also currently working on a digital currency as well. All of this is happening, of course, as the private cryptocurrency industry is imploding around us. We've seen this last year that Bitcoin lost 60% of its value. And unfortunately, many had believed that decentralized cryptocurrencies will be the future of commerce and a safe haven for wealth preservation, much like gold, against inflation. But unfortunately, the global central banks were not going to allow that to happen. Instead, it appears that they intend to force us all into a cashless society in which everyone uses digital currencies that are issued by them. And so we need to keep an eye on this because there is unfortunately quite a few things that might arise as a result of the implementation of a CBDC. And of course, there will be an increased surveillance from governments, and there will be more control, government control on people's spending and their decisions that they make with their money, that they will be digitized. So it's important that we are prepared and invest what we have in tangible assets that will be able to hold their value and be able to prepare for the future and the very near future. So I hope this was helpful to you. If you have any questions, feel free to send me an email. This is, of course, going to affect real estate, and it's already affecting real estate. And the CBDC, it will be a whole different world once that fully gets implemented. We know that the World Economic Forum has been really, really working hard on this. And their main thing that they say on their website is that actually the cost of cash is way too high for many countries, and we need to become a cashless society so to lower the costs of transactions. So this is, just another way to keep everyone under their thumb and everyone control. So anyway, let's keep an eye on this, and I appreciate you joining me today. Feel free to please like my channel, my video, and share it with your friends. And I'll see you next time. Thank you.